Welcome everyone to the Kendall Report. It is Thursday night, so this is the final video of the week. And we finally saw a green day for the first time since last Friday. We got the 5 days down, that 5-3-5 pattern ended on a reversal. We'll see if it can hold. I'll talk about this a bit in the technicals, and I'll talk a bit of the backdrop here from a fundamental standpoint. There is still a lot of things wrong with this market right now. And like I've been talking about, is we're trying to set up a right shoulder, but that's how it should look, right? There should be a lot of cross currents and a lot of uncertainty. So we certainly have that. So let's talk a little bit about a couple things that we really in the live room today. We watched that recovery rally in the last, I guess, about 15 minutes. We were down about 12, 14 handles, and they rallied up to a plus 10. Right now, we're down 625, still within the context. You'll see the expectations for today are going to be really important. We'll talk about the 40-40 number I've been throwing out there and see what the significance of that is as we come into Friday's close. So let's talk a little bit about what came out yesterday economically. We did see ISM manufacturing come in. It was actually unchanged. IHS PMI came in 51.2. I'm telling you, it's interesting because a lot of these metrics that are coming out are absolutely just hanging in there. We saw ADP miss yesterday, but a lot of these things are coming in, like claims. 232 was better than expected. They were down. I was telling you, I thought they would be up. The continuing claims, 1.438, they were down like 26,000, and we continue to stay under that 1.4, or actually 1.5, that number that I've been talking about. And the real story that's building here is that the labor market continues to be really tight and very strong. That's what it's telling you. It's not fluctuating. We're not seeing, even though you're seeing and hearing about big layoffs with big companies and all that, it's not materializing, at least at the moment, in these numbers. And I've been expecting for them to start to show up, and they haven't shown up yet. The other thing that I would like to discuss is Q2 productivity down minus 0.41 and labor cost up 10.2. So inflation on cost and labor costs are hanging in there really strong. I mean, there's still a lot of evidence of inflation that hasn't moderated here yet. And then, of course, we had some of the other stuff. Construction spending was down. The housing sector continues to get hammered. That doesn't look like that's going to change anytime soon. And in fact, I expect this to be probably over the next 3 to 6 months, see the housing situation worsen quite a bit, actually. I don't see any way out of this at the moment. So certainly lots of issues showing up in the numbers when it comes to the economy slowing down. There's no doubt. Now, we got out of the Fed cycle of Monday, Tuesday, and Wednesday of all these Fed presidents out there hawking around what's going on. And as far as what happened today, we traded, and I'll cover this in the technicals in a minute, we traded right down to 3,900 or 3,903 was the low, and then we finally got a pretty reasonable bounce here. We got 60 handle run for the first time. And I started to mention something last night when we were seeing over the last several days, we saw strength overnight and then fade into the U.S. Open. Last night we were seeing weakness, and we continued on early in the session, but then we saw a rebound and the market actually finish up higher, which is pretty amazing. I'm just looking, I've got quite a few notes here to cover. The sectors yesterday, utilities and healthcare, which are typically defensive, up 1.4, 1.7. Tech under pressure. We saw interest rates really jack up. I had put the cap on the expectations for the 10-year around 3.16 or so, maybe 3.9. We got to 2.6, 3.26. Big number, very big number. And the yield curve actually flattened a bit more. And I'm going to try to bring up a screen and draw in what I think the yield curve is going to look like as we come in to year end, my expectations. And I do see a lot higher rates on the front end of the market. I think the Fed's going to really push that narrative. And of course, they're not buying they're cutting back on the QT is, I guess, getting more extreme at this point. So they're definitely seeing a lot of liquidity being pulled out of the markets. But in spite of that, I still think there's still money that wants to go into the stock market on a short-term level. Will it continue? We'll find out. I'll cover in the details and the key numbers to watch for to see how we're going to finish the week from a technical viewpoint. So let's talk a little bit. Tomorrow we got the big numbers. Unemployment coming out, expected to be unchanged, 3.5. Jobs, 300K. I talked about this yesterday. If we come in like the ADP came in much lower at 130, it was expected, I believe, 280. I'm spacing a number at the moment, but something like that. But it was way under. It was almost half of what was expected. So I'm still basically what I told you last night. Bad news is good news. Good news is bad news. I think if we do start to see some softness in the labor from the unemployment level, maybe, just maybe, then we'll see maybe rates start to pull back in and flatten out. I think they're really at an extreme right now. And I'll cover all this here in just a few minutes. So I'm just looking at some of my notes here. Yeah, so tech's probably going to keep underperforming right now, especially if we see the 10-year up at that level. The Dow was strong. So there's a lot of cross currents in this market. And, the Russell way underperformed yesterday. And the Russell has a lot of financial stocks in there, and they're just getting hammered. Remember the old story where everybody was saying the higher rates are going to benefit the financials? Well, evidently that's not the case anymore. And I think it has more to do with expectations on demand for money and everything that's going on. We also saw crude oil under a lot of pressure, and I'll touch on that when we get into that section. But S&P is the only market that finished positive yesterday, up 0.3, NASDAQ minus 0.26, and the Russell down 1.5. So let's get into the database. We also have to set up, because we're coming into Friday, which will also be not only is at the end of the week, the database runs for the intermediate models, and I'll cover all that in a minute, but we also have a long weekend. So next video, Monday night, not Sunday night. So let's get into the database. So a couple things came into play here. It's amazing how the database is holding up here. And it just continues to lend me to believe that this market is setting up a right shoulder. We're just inching down. We had 1,037 sells, only 67 buys. We're at 55.82% bullish. So we're still well above that 42 number. And I would tell you, it doesn't look like we're going to get through there. In fact, what I was looking at a lot of patterns here. There's some that have broken down, but we're seeing some of this secondary market maybe trying to flatten out and maybe signal some uptrends. So just to talk a minute about the intermediate database, it's at 35.81% bullish right now. And 42 is the magic mark there. If we get above 42, that tells us there's going to be more of a sustainable rally. Now, this is as contrary as you could be, I think, on the internet right now. Somebody made a comment in the live room today that the shorts are so confident. It's like they're invincible. And like I've been saying, I think there's a right shoulder setting up here. It looks like technically we got the 535 pattern that I'll discuss here in just a minute to set up. Maybe that was it. I'll cover the details on what's critical here. But if we get a 42 plus on the intermediate, because just a lot of patterns are still starting to evolve. And this is my point, and I hope you folks can understand this, is that what's happening is we had the low in June, the market rallied up 43.20 roughly, and then we're setting this right shoulder. Well, when you look at the indexes, it looks pretty weak, but when you look at the backdrop of what's happening with a lot of stocks, those stocks during that time have been setting up and going through a bottoming process. A lot of them have not made new lows. There are a ton of new lows, but a lot of these patterns that are setting up are starting to come into play here. So if you look at the evolution of the market, if we break down further, like I said last night, if we got through 3,900, there was going to be a lot of issues, and we may still do that tomorrow. I'll set up all the details. We're by no means out of the woods here on this retracement that we've seen. But from a pure database viewpoint, this is what I'll be watching for as we go through these numbers from the standpoint of what's likely to happen in the rotation of the database and getting more traction. We may not. The last several weeks, I believe the better part of the last month, we have seen some traction come in. I've done a number of presentations this week talking about the database rotation, and there's still a lot of symbols also in the dailies, and I tried to point out why we're not seeing more attrition in the database right now is because some of these, there's been some monster trades where stocks are up 35 and 40, and we even have a bunch of them that are literally up 85 plus and some 120% in 2 months. And I know some of these are very small secondary stocks, but that's the kind of stuff that the database is looking at because we have 16,071. So we basically have 16,100 symbols in there. There's a lot to look at. And there's, I don't want to sound like Jim Cramer, but there's a bull market somewhere all the time. And this is showing that there are a lot of sub-markets, sub-trends that are going on in the background. Not everything, like I've said, not everything is based on an index, right? So there's a lot of things that can go on. Even in some of the biggest declines that we've seen, not all the stocks are going down. And in the case of 2000 and the dot-com, that was pretty material, and that lasted for the longest. And then we saw we'll call it, began in 07, but 08 into early 09. We saw a lot of that. We got down to about 8%. Recently, coming into June, we got down to about 12% bullish. So basically 9 out of 10 stocks we had no positions in. And then we started to see that strong rotation on the short term. We're just now getting that secondary rotation coming in on the weekly. So I'll try to tweet this out over the weekend. I know we got a long weekend just to update you. And those of you that have Wavetech, feel free to, tell the folks on Twitter what's going on there. So let's go ahead and get into the technicals. All right, we'll start with the S&P. And I just want to bring up this chart real quick, just because it's easy to see here. And I think a couple of things that I've been talking about for a while here. We're going to start here, and then we'll go back to TradeStation here in a minute. But what we're seeing here, is a couple of things. If you look at these volume spikes here, we tend to get volume clusters, high volume clusters at the lows. And we tend to be in troughs at the highs and at the lows here. Here's another one. I can get it to draw up right. Here's another one where we get these little peaks in volume at the lows. So a lot of things that I talk about when we're looking at volume, we start to see increased volume. Now, this is the futures contracts that we're looking at here, not the volume on the market itself, right? But this is looking at these, and we have this little cluster of things going on here with these increased volume envelopes. And these are, like I said, normally these type of envelopes tend to be bottoming patterns. There's another one here. Typically that's what's going on. So we are definitely seeing a very climactic. I talked about last Friday was one of the higher levels we've seen. It wasn't as high as it was when we came into the 3,600 low. So we have a little bit of we'll just say there's a little bit from this high down to here, a little bit of a divergence low here. So and I've talked about this a lot, I'm just going to stay drawing on this. This is the pattern that we had. I originally had thought that we would come down into this 4130 area, something like this. We breached that. We continue to come down all the way to 0.618, which is 39 even. Let me take this off and we'll just draw. So this is a pretty elongated move here. So typically what's going to happen, you're going to get something like this, and this key level is going to be this 4220, something like that is going to be a key area. And I'm just going to draw in what I'm expecting here is probably something like this, where we're going to get into the month of September is just going to be whipsawing. Whether we get as high as 4,200, if we can go higher than that, but because of the depth of this most recent decline, where it looks like there's going to be a lot of work done in here as we come in through September and maybe into October from that viewpoint. All right, let's go back to TradeStation here and do our normal analysis and just take a look at what's going on here. So far overnight, we've had 58 low and 74 high. S1 is 39.49, R1 39.87. Those are minimum levels. We've got big news coming out tomorrow. So I'm still leaning S1 to be 49. That's another 11 handles lower. That put us down about 20 on the session. And then my expectation would be at least we'll trade up toward 39.87. If you look at R2, 40.09, and I was talking about the 40.40, RXT is 40.49. So if we did trade up to those levels, that would be huge. We also have the 10-period moving average coming in here at 40.57, so up around those levels as well. I do not expect the markets to be that strong, but anything's likely with these numbers that are coming out tomorrow, and certainly going to see a volatility. But if we broaden our thoughts out here just a little bit, and we look at S2, 39.28, the R1 would be 39.87. So we could expand down, come down to 28. We still hold yesterday's low. Yesterday's low was 03.50. And so we printed right down to that 3,900 level. That area, by the way, if I brought up an intraday chart, we were in the live room and they're trading it today. And that number was tested probably 3 times for sure, maybe more. So that was pretty significant. As far as if we take out 28, this is going to be the number that I want you to pay attention to here, is if we take out the 39.28 level, That's going to set up S3, 3907. That's a retest of yesterday's low. If we get there, I think if we get below 28, there's probably a problem. We could take out this low and still have more downside. So you look at the PPMs, they're all very negative, minus 0.67. So PPM 1 is starting to tick up a little bit. It was minus 83, I believe, last night. Let me just look here. Yeah, yeah, 77. So it's a little bit better than it was yesterday. Long ways to go before we're going to be ready to challenge this 10-period moving average. But a few days, we come into Tuesday, Wednesday next week. It'll be a shortened week. Maybe we can get something. Tomorrow's going to be so important that we hold these numbers. So the outer bounds of this range is going to be 28 on the downside. That's your critical level. On the upside, you're looking at 39.87, and most likely would be the top. And if there is some crazy action tomorrow, then we could print up to R2, which is above that 4,000 handle 09. Now, I've mentioned a couple of times here, I just want to complete this section. I've mentioned a couple of times that the 40 level was critical, and the reason why that's critical is there is currently a weekly buy signal on the models, which came in around, I think, 41.40, something like that. And so if we don't get back above that number, it looks like to me it's going to be very close to an exit, and that will put everything neutral. We have no long positions then if that happens, and I'll update that on Monday night. But I would say we would have no positions at all in this market. We exited our long position on 823. I thought we were going to hold this 10-period moving, the 40-period moving average on when we first came down. That was 40.49. If you remember, I was talking about 40.80, 40.40. We took that out. There was also a 10-period moving average on a weekly there. None of this support held. We went right through it. And the conviction of the sellers have been substantial. And I'll just make a general comment, because we were in the live room, those of you that were in there, we were talking about the really odd patterns that are happening on the 1 and 5 minute charts. They've just been very jagged from that standpoint. And let me just see, I think I can bring them up. Let's see. Yeah, I thought I had it up here. Bear with me just 1 second. I'll see if I can bring this up. Yeah, if I expand this out, this is, and it's doing it again tonight. This on the right-hand side, let me go full screen. On the right-hand side is the 1 minute, and you see how it jagged down, but these are the spikes that we've been seeing, these patterns throughout yesterday. This is the 5 minute. We came into the highs of the session. Now we're just getting these really strange, tight volatility. And so we're drifting down. Right now, our Fib projection tool is suggesting for 39.56, which is heading toward that S1 number I just talked about. So that's actually a live number right now on that. We don't have any projections on the 1, but these patterns have been very unorthodox, because normally there's some really common patterns that we watch for trading intraday. We're not seeing those at all, just really strange patterns. And for the most part, we're just seeing a scalper's market. And yesterday was finally at least had a two-sided market multiple times during the day. So that was actually encouraging from that standpoint. Okay, next we'll look at the NASDAQ futures. Similar patterns. The PPM 1 is turning up here. Still got this kind of rounded pattern here. lot of noise in this market and a lot of overhead resistance. We're looking at ppm1 at minus 0.79, ppm2 minus 0.39. So that just tells us that there is a ton of resistance at 12,620. I don't see us, if we just look at the grid, same numbers as the S&P. We're looking at 12,365 as R1. R2 would be 12,447. S1, 12,219. We're a little bit above that. The low's been 12,255. So we're a little bit above that. Same number though. The penetration of S2 is a bad thing, and we're probably going to see another low in this pattern before it bottoms. So be very cautious on how this market trades. And if we do hold S1 on the S&P, on the NASDAQ, that will be very key to the pattern. And like I said, it's somewhat encouraging that we're seeing ppm1 turning up, but we still have downward acceleration in ppm2, and that's just setting up for massive resistance above head. So to be able to get this market to rally, there is a ton of work. I'm going to say 3 to 5 days. We're going to have to hold these prices, and we should see probably Tuesday, Wednesday when we come in next week, we're possibly going to see more dissipating of this downward pressure. We'll see what happens. Right now, there's some really critical numbers. Like I said, S2 on both on the NASDAQ and on the S&P. I suspect the same number. I'll confirm that as we go through the Russell here next. All right, so looking at the Russell, very interesting. And I'm telling you, the Russell has done this before. We have a cycle low due tomorrow, which is very interesting, I think. The Russell is under pressure because what I was talking about when I covered the 10-year and cover the interest rates here in a minute, these higher yields are really putting a lot of pressure. There's a lot of financial stocks in the Russell itself. So this is going to be an interesting thing to watch, because especially since these dots that you see here, this is the warning signal for a cycle coming in. The last time we had one was over here at the lows, and then we had a cycle high over here. So this is very interesting that we're coming in here after that 5-3-5 pattern that I talked about last night, and now we're getting a cycle due today or Friday. This is the RTY. So we're looking at that, and notice that the turn up in the ppm1, which is still negative, but it is more succinct than it is on the other indexes. And this has been happening for a while now. Tends to be a little bit of a lead here in this index for whatever reason. But this is interesting that this came up. Now, I had not reviewed this chart before I came live with this, so I didn't see this, and so it was somewhat of a surprise, but it's there, and that'll be significant. So let me just talk about this cycle just a little bit more here. So if this cycle is going to be good, then we're going to have to close higher to confirm it. So if we close higher on the Russell, I would say if we close higher across the board, S&P, NASDAQ, and on the Russell, that's going to be probably a significant thing. And we're still, like I said, still not out of the woods. I think tomorrow is very critical. Watch S2 across the board. S2 here is 1825, and the low yesterday was 1797. So there was quite a bit. Let me make sure. Yeah, the low yesterday was 1797, and STX was 1805. So we traded below STX yesterday. And for today, we're looking at S1 1813. We've had a low of 19. So we're almost printing S1 here in the Russell. So this is an interesting setup. So take note of this and watch how this thing trades tomorrow. And hopefully we're going to have a lot of things to watch tomorrow. And we're working on getting a couple things going. We're working on getting our Discord channel open, so I'll be talking to you about that. Maybe watch Twitter, and I might even end up doing just a quick video over the long weekend to talk about that. All right, so let's take a look at the 10-year, and we did get something interesting here. We got an RTX sell signal on the daily, but we're getting massive acceleration to the upside. So these yields, I talked about this back on August 8th. We got a buy signal at 27.92. I'm sorry, 27.92, which is 2.79. We'll call it 2.8 for yields to go up. We're still within that buy signal there, or otherwise we're still in a higher yield scenario, and the PPMs are still accelerating. So possibly we get some sideways movement tomorrow, and we'll see what sets up from the standpoint there. But let's take a look at the weekly, because we did print up to a pretty critical level. We got above the RTX number on the weekly, which is 3.245. We went out at 2.56. I'm going to see if I can get, while I'm talking to you, see if I can get a quick look at the overnight action. Yeah, actually up 3.283. So there's still some selling going on here in this contract. So in the 10-year. So basically, we're looking at the weekly. We're getting PPM1 actually turning up and accelerating, and it could get. We don't have any Fibonacci's, but the high that we had in this pattern here was 3.483. That was that spike that we had back on 6/17 when all of this stuff started to really flow. So this has the potential to basically destroy everything if we do get this spike in yields, and potentially take out any possibility of any low here in the markets at this time from the equity market. So this will be key. I think what we'll see, though, based on, we've got an RTX sell potentially coming in on Friday, which would tell us we'd get 1 to 2 weeks of sideways to down. It doesn't necessarily signal a major sell signal and that yields are going to start to rally, bonds will rally and yields will go down. It's not what it says. Basically, it suggests that the market should stall here when it gets extended. Now, the RTX sell signals aren't as good as the SDX buys. So it'll be interesting to see what happens here, to see if we get that sideways movement. Got a long weekend ahead of us and a big day tomorrow to get through. So let me see if I can, bear with me 1 second, and I'm gonna try to just trying to get a device to work here. So I'm going to talk about a little bit about the yield curve here, and this is my expectation as we come into the we'll say year end, but over the next couple months. I believe the Fed's actually telling us what they're going to do. Is it the right thing? I would argue maybe they're late to the party, and what we're seeing, something we talked about, and I'll go into this in a minute because I'm going to cover crude oil, but there's some things going on potentially in crude oil that could crush the oil prices here and send them lower than most people think they're going to go, and I'll cover that in a minute. If that happens, then what then that's going to take what? That's going to take pressure off of the inflation scenario. Energy is a big thing. I know we got Europe upside down on everything, nat gas, electricity, everything. I get that. But the crude could set up at least a psychological sentiment change in the market. So let's just draw, I'm going to just draw a box here real quick. And we're going to put this at the yields over on the side here. And basically, right now we're going to put Fed funds in the first box. We're going to go 3-month, 2, 5, 10, and 30 down here across the board. And this is how I suspect the yields will look. They're going to keep raising the Fed funds probably to 3.5% to 4% up in this range here. And then the 3-month will be very close to this on the short end. The 2-year, I believe, will actually start to decline. And let me just change this real quick because I'll do something. I'm going to draw more of a dot here. So we'll go here. We'll say we're at 4. And these yields maybe get a little bump in the 5 or the 10. And the 30 is going to be down here. So the yield curve is going to be, in my opinion, will be totally inverted by the time we get to year end. And, you know, I know we had the 210s inverted and all that already, but ultimately this is how it should look. This is what I believe the Fed wants it to look like. And if they get this, it's going to be key to see how markets start to adjust to these yields. Because I think on the back end, I've talked about the housing being under pressure, talked about a number of other economic factors that are showing weakening in the economy. So on the back end over here, this is where we're going to have less demand, probably the ability for yields to be lower. Now, I've got them down maybe to 3. They could even be below 3. I've talked about the 292 level on the 10-year being substantial level, but I do expect to see this head into this type of zone. All right, I've been wanting to show you that all week, and we'll talk more about this when things get a little closer in from that standpoint. So let's go ahead and let's dig into crude oil now. All right, crude is coming down below that demand line that I told you a little bit, not too much on education, but these BPMs, what they do is they set up a PPM 3 is still positive, a plus 0.92, and that usually will represent a demand for what I call a demand line, or where there's likely to be buying. That's why when I'm talking about things here, just going to draw this in. So yeah, we're going to get this line here. I'll draw a line next to it here. This is going to be your demand line. So you're going to stay most likely a little bit above or below that line. I don't see us drifting too far down, but it'll be interesting, like when we get the update here and see what the market grid looks like. You're seeing down here the PPMs are starting to roll over on PPM 1 and 2. Over on the left-hand side, I'll draw an arrow on it, as we've got a minus 0.17 here, and the PPM 2 is minus 0.07. Those numbers are also over here, right over here. I'll draw them on the right-hand side. So these are all really critical levels from the standpoint of telling us what's likely to happen. And the biggest number is here, which is this PPM 3, which is at this plus 0.92. And that just suggests we should hover around this line. So we're likely to just see the market grid continue to be in the square box formation. That's going to be like this. Maybe it lowers itself a little bit, should stay above 85. But let's talk about something here that I think could be significant. And this Iran nuclear deal, if they make this deal and Iran comes into the markets with oil, we're talking about this in the live room today. China's basically taking, let's just say they're taking Russian oil and private labeling it and redistributing. So there's a lot of bad actors out there, and the whole idea from the standpoint of cutting back the Russians. But the point is, if Iran comes to market and the market starts to fill up a little bit with the expectations of the economy, the higher yields, all the stuff that we know in the backdrop, and we're likely to see this thing start to come back in here on the downside and maybe print down an 82, 80 level. We're up right now 1.34. We're back at 87.77. So the market wants to stay above that 89 level. So it could see 87 up to 92, 94, and just back and forth here. I still think that we travel along that slope. Next, we'll cover gold. Gold continues to be under pressure here. Been talking about this for a while. These fib targets down here at 1682 is a min, but below that, below 1680, it is a free fall to probably 1600 and the possibility of 1550. And I'm not going to cover the Dow tonight, but it has everything to do with the Dow. The Dow is printing well over 109 earlier today, and I talked about the target of 111 plus on the Dow. That is really going to just kill gold. There's nowhere for it to go but down at the moment. What looked like we were going to get some stability in these PPMs over here have actually turned south all of a sudden with the weakness in the action. So we're just not getting, there was a point in time going back to last week, if we could have gotten a stayed above the 200-week moving average, we would have had a chance at this thing. At 200-week right now, but is at 1745, so we're almost $40 under there right now. So that's an issue, and we're seeing even the Wavetech 200, which is tracking that, is also weakening. And what that tells you that it's still slightly positive. The 200 is slightly sloping up, but what it's telling you is it's rolling over. If the 200 turns down, and we're in I would call a super bear market in the metals, and I won't call them metals, let's just say gold. But I think we're going to see that's going to continue on the downside for a while. I mean, there's no escaping this. And unless we get some big reversals, something comes out that changes this. Right now, this market's doomed primarily to the strength in the Dow, which is probably one of the most, at least at the moment, one of the more reliable trends, and probably best case on the Dow I'm talking about is going to stay strong to stable to strong, and that's just not a good thing for gold. All right, final market is going to be Bitcoin. Bitcoin continues from a weekly standpoint. The low has been 19,556 S1, 19,158. If it takes that out, then you get 18,372. However, my expectation, we're saying PPMs on a weekly basis starting to turn up. I think there's more of a stable market. I'm still looking for so far this week, we had a high of 25.67. We look at R1, 25.62. So we traded right into that R1. And I think if we come into next week, this box formation is going to continue. So you're probably looking at 21.3, 21.5 as an upside. On downside, still looking around 19, maybe a high 18 handle. But I think overall, it looks to me, just based on these PPMs, is that it's going to remain stable going forward. Okay, folks, that's going to do it for this week. And until Monday night, like I said, make sure you subscribe, hit the like button. And if you haven't got these indicators, get them. We got a long weekend. We've got a 9-video course on how to use them. And I'm working on some other things to advance courses as well to get in that. So anyway, thank you so much for being part of this channel. And I will talk to you on Monday night. So have a great weekend. Good luck trading tomorrow. I think it's going to be a pretty wild day. Those of you in the Discord room, I'll try to spend some time in there tomorrow. And like I said, very soon, we're working on making that Discord room. It's a private room right now, working on making that a public area. And we're just getting moderators and some leaders and stuff like that in place right now. So anyway, folks, have a great day tomorrow. Can't wait to see how this market trades and see what the next part of this trend is going to be. Have a great day. Talk to you tomorrow. Actually, talk to you Monday. Have a good one, everyone. Thanks a lot. Thanks for being part of the channel. Hit the like button before you leave.